and on the Advisory Council for Sustainable Investing. If you're not familiar with the Angeleno Group, they're a leading sustainable investment firm. And as an active partner with WRI, we've really learned a lot from Daniel about sustainable investing, and he has been extremely helpful on our WRI board as one of the members who contributes across multiple WRI programs and particularly participates in our Finance and Investing Committee of the board with oversight of the endowment. So a true expert on this topic, and we're lucky to have his insights today and collaboration all year round. So thank you, Daniel. I'll do just a bit of housekeeping before we kick it over to our speakers. So the webinar today will start with background on the Sustainable Investing Program work. We'll dig into the findings from the latest research and next steps, and then we'll open it up for discussion in about the last 20 minutes of the hour. But we do anticipate that this will be a pretty small group here for the CCG, to the extent that we should be able to have an engaging dialogue. So if you do have questions throughout the presentation, I encourage you to use one of the two features built into our webinar platform. So you can either use the raise your hand feature, and we can take you off mute and call on you, pause to call on you to ask a question in live time. In that case, please do introduce yourself with your name and your company. Or you can use the chat feature, and we'll be manning that and be able to read back your questions for the speakers and for all the participants to hear as we go through. So then with that, I will go ahead and kick it over to you, Daniel, if you don't mind getting us started.
Sure, Emily, and thank you for that undeserved and kind introduction. First of all, just would want to echo Emily's sentiments to thank all of you participants in the call for being with us today and for being parts of WRI's corporate consultative group. In particular, I wanted to express our gratitude to some of the members who I believe are registered for this call, who serve on CCG's advisory board and really help us make CCG as effective as it can possibly be for our stakeholders and constituents. And that's Kuna Park from Goldman Sachs, and I believe Lori Michelin from Colgate-Palmolive, who's signed up for the webinar today. So WRI, as Emily suggested, and as you may have read in some of the collateral that's been sent out or exists on WRI's website, WRI launched its Sustainable Investing Initiative about 2 years ago with the vision of advancing sustainable investment practices in the mainstream marketplace and really shifting capital over time to companies that are leading us toward a more sustainable future. I'd like to say that WRI was the first to think of this, but in fact, in many ways, we see ourselves as part of a larger movement in the capital markets, beginning to identify and embrace the importance of sustainability. As many of you on this call know, just as of last year alone, investors, which is the world I operate in, that manage over $62 trillion in assets, have committed to sustainable investing practices through the Principles for Responsible Investment, the PRI, and that's a 195% increase from 2010. In our case, while we're operating in the context of these larger macro trends in the institutional investment world, it really was very organic, and it originated from an initial attempt to better integrate sustainability into our own endowment at WRI. And I can share with you that fellow directors at WRI on multiple occasions over the years expressed the importance of us really walking the walk and aligning our mission with how we steward our own even modest endowment. And as we got deeper into it, as Elizabeth will explain a little bit later in the webinar, we quickly recognized that it's a difficult task for asset owners to do well. And also from an acknowledgement that WRI could support the movement and leverage its relevant research and data as a convener and a researcher, we delved deeper into the process. And that helped give sort of undergird the launch of the Sustainable Investment Initiative. Specifically, to achieve our mission, we engaged in a number of activities to provide practical tools, resources, and information for investment decision makers. And those of you who've read the report will note that they include a handful of specific efforts. One, producing cutting-edge research for investors. Two, building tools for companies and investors. We'll have some examples of that later on in this presentation. Three, exchanging knowledge and educating asset owners. Four, supporting asset managers to expand their services and meet needs in the market. And fifth, finally, continuing WRI's tradition as a convener and bringing relevant stakeholders and thought leaders together. So that's a little bit of context on sort of how we got to where we are today on the Sustainable Investing Initiative. Emily, anything else you think we ought to touch on there?
I think that's great. Thank you.
So before we dig into our findings, perhaps it'll be helpful to start with some common definitions. What is sustainable investing? So the lens through which WRI answers that question is a humble lens, because we realize that the space is evolving and these terminologies, frankly, are used inconsistently. We define sustainable investing as a broad umbrella term for all investment practices that consider ESG, environmental, social, or governance factors to inform investment decision-making. So this term includes a wide range of distinct strategies that are pursued for a variety of reasons, whether for risk mitigation, such as avoiding potentially risky investments like stranded assets, or alpha generation, or mission alignment. So the returns expectations vary widely within these strategies. We'll talk more about them in our discussion to come. Finally, onto the research. So our recently published working paper is the culmination of a year-long landscape assessment study, one of the first research activities of our Sustainable Investing Initiative. We came out with the working paper last month at the end of Q4 of 16. And it's our first effort to sort of contribute some intellectual content in the form of a working paper to this dialogue. We'd seen a lot of research on sustainable investing, but none that took the broad market perspective from an asset owner's point of view. And we really wanted to understand the state of play for sustainable investing in the institutional marketplace and to identify the main drivers, barriers, and strategies that exist in the market currently. And that way we felt we could develop a strategy for providing more strategic guidance and resources for asset owners, things that would really be actionable and useful for folks in the institutional investment landscape around sustainable investing. So we tailored the research to institutional investors, specifically asset owners, who are thinking about embarking or who are currently in process on a sustainable investing journey. And we spoke with really our team, and Elizabeth, who you'll hear from shortly, spoke with representatives from 115 institutions, including, I believe, about 40 asset owners with collective assets of over $1.2 trillion, as well as asset managers, consultants, rating agencies, standard bearers, and investors networks. So with that as a little bit of context on our Sustainable Investing Initiative, I'll hand it off to our fearless leader in this area to talk more about the content of our research and the working paper. Elizabeth?
Thank you, Daniel, for that background. We really appreciate that. And so as our members on the line can tell, that one of the things that's really been helpful to this research has been that it's very grounded in the practical experience of our endowment, and Daniel's been a tremendous resource for us in that way, and we think that has definitely made this research better that I'm about to talk a little bit about here. So thank you, Daniel. So I'll talk a little bit here about the key findings of our landscape assessment, and then we'll tell you how this relates to what WRI will be doing going forward in this space, which we're very excited about. So the key takeaways here, the one that's really interesting to us is this first one, which is that of all the asset owners we spoke with, these 40 asset owners who own over $1 trillion of capital, this was the discussion of the day pretty much for all of them. Even those who really had no interest in pursuing sustainable investing. And so we made a point to talk to asset owners who actually were not necessarily predisposed to sustainable investing. We wanted to talk to the broad marketplace. And what we found was that for even for those who are not immediately pursuing this, they're still grappling with how to incorporate sustainability factors over the long term into their endowments. So every single asset owner we spoke with had this discussion come up at a very senior level in their institution, either at the board of directors level or the chief investment officer level. And so and with the exception of just a couple of them that I mentioned that were not planning to pursue this, all of the rest of them were. So there were just a very small number of outliers that still had talked about this but weren't planning to pursue it. So the enthusiasm is quite great. There are a number of drivers for that, which I'll talk about in a little bit, but the demand or potential demand is quite strong. The second big takeaway here is that the market infrastructure is increasingly supportive of sustainable investing. There are new sources of data for investors, new standards that have increasingly matured, and some products that have increasingly matured and are of interest to investors, and increasingly capital is going into them. So that's the second big takeaway there, that there are increasingly ways that asset owners can engage in this space. But the third finding is that despite all of this interest by the capital owners, the market is still young. There are still significant bottlenecks in place that are preventing the mainstreaming of sustainable investing. And so that, of course, that's what WRI's research focused the most on. And what we at WRI are most interested in is what are these bottlenecks preventing this great demand from the asset owners to actually making capital flow in the market in a more sustainable way. So first I'll talk about the drivers. What is causing asset owners to start talking about sustainable investing or continue talking about sustainable investing in more and more serious ways? There are a lot of drivers, and many asset owners are experiencing more than one of these drivers. And so, we think that this is really what's causing this movement to sort of raise to the next level at this point in time. So the first one is the evidence of materiality. This idea that as a long-term asset owner, a pension fund, an endowment, a family foundation, the owners of capital who really care about what their capital is going to be doing in the next 10, 20, 30 years, that these owners have to take sustainability factors into account because it matters to financial performance over the long term. So this evidence of materiality is really important, and increasingly there's evidence that has come to these asset owners really in the form of data that shows that ESG factors can lead to higher returns, and very importantly also lead to lower downside risk in terms of market dislocation and poor performance. So these things are both quite important, and so that's an important new factor we think that is very important to a lot of asset owners. The other interesting thing is that this has become, the materiality discussion has become less a question of let's avoid assets that are going out of the economy, so less about not investing in things that are becoming stranded, like certain fossil fuel assets, but more about not missing out on tremendous growth opportunities going forward. So they've seen in other industries that are technology-driven that certain companies and certain types of investments can grow quite quickly, and for the asset owners that don't have a piece of those, they miss out on sometimes very unusual, very fast-growing opportunities going forward. And so many asset owners are of the belief that this is starting to happen, and we see examples increasingly happening in the sustainability area where the market is just broadly transforming. And if they are not invested in these subsectors of the economy and these companies, they will lose out, and their portfolios will be impacted long term. The second really important driver is supportive policy. Every single asset owner that we had talked to had heard of the Paris Climate Agreement, for example, and was quite interested and frankly concerned. A lot of them were fearful of what that might mean for their assets if they didn't completely understand how to incorporate climate policy implications into their assets. So that was causing quite a bit of interest among these asset owners. In addition, there in this country, in the U.S., there have been many policy changes and already and yet to come that are increasing interest in this and causing market dynamics to shift for these asset owners that they're focused on. The third one is really the desire for mission alignment. Now, this is a trend that's been going on for a number of years, and it's has been particularly true for foundations and institutional family offices who have a mission desire to align the way that they invest capital with the mission of their foundation or with what the family, the owners of the capital, actually want to achieve in the world. So it comes down to mission alignment and also in some cases being able to use the capital to further mission even more beyond just aligning it. And then the fourth real driver is this social movement. So the one that everybody's heard of probably the most is the divestment movement. So the movement, the call by stakeholders involved in an institution for the asset owner to liquidate all companies that are owners of fossil fuel assets. So there, in that particular example, there is a list of the top 200 fossil fuel asset owning companies, and that's usually what these stakeholders are calling for. We actually found not that many asset owners who had followed that particular path, but what it did do in almost every single case where that debate has come up is that it really caused quite a bit of interest in learning about a more holistic way to invest sustainably and ensure that one's assets are guarded for with respect to climate change in the entire portfolio, not just that narrow subset of it that owns fossil fuel assets. So a lot of drivers, and again, several asset owners we spoke to had experienced more than one of them at a single time. So very important to driving the demand today. Okay, so then in terms of the strategies, so this is, Daniel mentioned a little bit about some of the unclear definitions, and this is where a lot of investors who are coming to sustainable investing broadly for the first time get confused, is that it's sort of alphabet soup and all these different terms, and the terms can often mean different things to different people. I mean, that's almost always the case with these things. What we did was we took all of the data and all the information that we had from this year-long study, and we tried to put some definitions around these strategies. And this was really because we were doing our research and we were writing this report with the aim of trying to educate the chief investment officer of the board of directors of asset owners. So we've heard very positive feedback about this particular chart shown here on the screen as a way to just help get the conversation going, especially at the board of directors level. So there are 5 main sustainable investment strategies. As you can tell, they sort of go from all the way from the traditional side here on the left to through negative screens, which is what I just described. Fossil fuel divestment is one of them. It's about avoiding the bad for one reason or another. You think that the returns are going to be lower with that type of investment, or because there's a moral reason to avoid it. And then moving over to the right here is ESG integration, and this is really where investors take environmental social governance data and they really integrate it throughout the investment process as part of fundamental decision-making process. And so this can be somewhat about excluding things, but also it can be taking a more proactive, positive approach to identifying companies so being a little bit more solutions-oriented versus just cutting things out. The fourth category here is positive screens, which is where the investor is very focused on favoring investments with positive ESG performance, because, for many reasons, but it's a very proactive, positive type of screening. And then the fifth category is impact investing, where investors are targeting companies explicitly because they have a positive ESG impact. Often investors are willing to sacrifice returns for this type of investment, and so you often see that category of investing as perhaps a carve-out in an endowment or a pension fund where the return expectations financially are different from the rest of the portfolio. And I should say, too, that often what we saw from asset owners is that they will start with one of these strategies, perhaps a carve-out for impact investing, and then, is one that's commonly chosen, and then they learn things from that, and they decide to go into one of the other strategies and work on the rest of their endowment. Okay. The next slide is all about some examples here of where the market infrastructure is really growing to provide more structure and more information, more standards to investors who want to take sustainability into account in various ways in their endowments. So, the sort of top of the slide here are reporting standards, which have provided, good frameworks for investors, investment managers, consultants, and others to be able to know what to report and to be able to ask companies about what to report. This is an area that I think we would really, enjoy future collaboration with CCG members on, is trying to understand to what impact these reporting standards are actually having on how you run your businesses, what else you think is needed. What we found from the investor standpoint is that there's a lot of confusion around these reporting standards. So while they are increasingly maturing, often there's sort of a gap when it comes to investors, especially investors who are just dipping their toe into sustainability for the first time. And then there are increasingly more and more providers of information. We've listed many of them on the bottom there. I think all of these firms are growing tremendously with the reach that they have in terms of data for portfolio companies around the world. And this is traditionally where WRI has played a big role with a lot of its research, is in providing data to some of these tool providers that investors use to evaluate sustainability opportunities and risks. So WRI Aqueduct is the leading water risk assessment tool out there, and that's on the Bloomberg terminal and on MSCI and on some others. There are other examples of that too, but I thought I should note that. And then, so this has, the increasing infrastructure around this has led to the index organizations creating different indices, different ways of measuring groups of companies, and so here we list some of them. But all of the leading providers, S&P, FTSE, MSCI, NASDAQ, are doing analyses that are resulting in different ways of having sustainability indices and funds that people can invest in. So I think we'll show. We can talk about these later, but here are some examples of them. And I think this is another area where we'd be quite interested in learning from you all about how you perceive these indices and these companies as being sort of helpful and being helpful to your efforts to be more sustainable in ways that are material to your businesses and not, where you see some of the work that WRI might be able to do to actually make these indices better, make them stronger, make them actually rewarding the companies who are doing the right things. So I talked a little bit about the drivers that we heard from the asset owners that are driving sustainable investing, and then I talked about the strategies that those who actually are investing sustainably are pursuing. But as I say, WRI is always really focused on, of course, are the barriers. What are the bottlenecks? What barriers can the market overcome, and can WRI help play a role in overcoming that can unleash this tremendous demand that we see being driven to actually get the capital flowing into these strategies on the right. So we've identified 3 key barriers here, which I can discuss here, and then we'll go into more detail about how they impact our program work later on. The first is limited frameworks. So how do you get this discussion at the board of directors actually into a governance document or governance process for an investment committee to be able to move forward and have a plan for how to take sustainability into account in its portfolio. So what we heard from asset owners is that often, a board director will raise the question: should we be divesting perhaps from fossil fuels? Should we be doing impact investing? Should we be doing one of the other things? Perhaps students or other stakeholders bring the discussion forward. And because of the lack of clarity around language that I discussed earlier, and the lack of sort of a clear framework for how you would move forward and think about what the different strategies are and how to incorporate sustainability into one's assets, one's portfolio, the conversation often gets so confusing and becomes such a time suck, frankly, that it can stop there, or it can go on sort of in a passive way for quite a while without actually getting moved forward. So we heard this sort of again and again from boards of directors, who of course have many other responsibilities at every board meeting that they need to get through. And so we think that there is a big role to play here in terms of education and providing clear frameworks for the general asset owner who really wants to take material sustainability factors into account over the long term. How can they do that and go forward? The second big gap is really about data. So as I said, WRI's I think played a great role in providing very good risk and opportunity data in certain sectors of resources and climate. But for the most part, if you are an asset owner who is invested globally and in all asset classes, there isn't data to support how you evaluate sustainability risks and opportunities across your entire portfolio. So, we heard again and again from asset owners, for example, who are invested in emerging market economies, that the data is is really lacking in these emerging market countries, and oftentimes the standards are not totally clear for how you use the data and compare emerging markets to developed markets, and that becomes increasingly important because, of course, the market is completely global, and asset owners, even the small ones, really are invested globally. This is also true across asset classes. So, I think we're particularly interested in the public markets, but there's even quite a bit of inconsistency within private markets and within other areas that are very significant locations of capital, frankly, for these asset owners. And then I guess the last thing I'll say about that too is sometimes even when the data is there, it's unclear. Asset owners and managers aren't totally clear about how to use the data because this is not their area of expertise by training. A lot of them have been raised through a traditional financial system, and so there's education even when the data is out there. And then finally, gaps in the investment chain. So there is this perception and then somewhat of a reality as well that if you want to invest sustainably, there are not products that are available to you across the entire portfolio of your assets globally and across asset classes that you can invest in without sacrificing financial return. So, so this is sort of an acknowledgement that in order to mainstream, WRI and others really will have to play a role in working with managers and working with consultants and actually being active in the marketplace. It isn't enough to just get the demand, get the harness all this demand that we're hearing from the asset owners, there does have to be changes and improved products and a wider range of products in the marketplace. Okay. So this slide is sort of a different way of looking at what some of the barriers are that we focused on and that I discussed. And we thought that this slide was really interesting for CCG members in particular, because what we found at WRI is that a lot of the corporations really are thinking quite long-term, quite innovatively, and they're incorporating sustainability into their businesses because there are good business cases for doing it. It's important, it's fundamental to the good performance long-term of their businesses to incorporate sustainability risks and opportunities. And what we're increasingly hearing, as you heard from our research here, is that the asset owners really want to do this for their assets. These asset owners want their capital to actually perform over the long term, and to do that, they are convinced that they need to take into account these sustainability risks and opportunities. But we found in this research is that there are all of these intermediaries, and I don't want to, we understand that there are great ranges within each of these categories here in the middle in terms of the actors in the middle under the category of barriers. But for the most part, that's where we see sort of the biggest bottlenecks are with these intermediaries who have different incentives than the asset owners and somewhat different incentives than the corporation. So what we're thinking, and what we see the potential for in the marketplace is that if this tremendous demand we're seeing from the asset owners is actually unleashed, if the investment managers, the consultants, the rating agencies, and the legal counsel actually start to harness and to listen to this demand that they're hearing from the asset owners, the impact in terms of the corporations could be quite big. Because what we understand from the corporations who are the leading sustainable corporations is that they are acting like that not because they're hearing the demand to do that from their investors. They're doing it for lots of fundamental business reasons that are very important, but thus far, from the most part, it's not because they're feeling the demand and the pressure to do that from investors. So if they were to start to feel that from investors, you could really see just a widespread change in the marketplace in terms of sustainable actions by businesses. Okay, so now I'll talk a little bit about the next steps. So what is WRI doing that really came out of our research? And so, yeah, so we, what we wanted to do at WRI, and we're very fortunate to have the opportunity to do through that research, all the research that we did in that first year, was to understand where the big barriers are to mainstreaming sustainable investing, and then really map that up against what we saw as WRI's strengths and what we saw as the other organizations are doing really well in the marketplace. So we took that and we've come up with a program plan that really has 3 parts here. And this is going to be our focus going forward, and we're really excited to work more with CCG members to the extent that there's interest in really making these things better and more powerful. So we are first working with the asset owners to get them unstuck. So this will involve developing investment frameworks so that sort of lack of ability to get out of the conversation in the stuck phase at the senior levels of these asset owners. We believe that there is a great opportunity to provide investment frameworks using what WRI, frankly, everybody else at WRI spends their time researching what are the long-term sustainability risks and opportunities for the world that companies are having an impact on and that companies are creating this future world. How can we translate that into an investment framework that is digestible and practical for an asset owner to be able to move forward with and frankly work to drive demand from their investment managers and consultants. So some of this will be around communication in common language, but it will really be grounded in the work that WRI is doing around the Sustainable Development Goals to make sure that these asset owners can design portfolios such that they meet the Sustainable Development Goals going forward and serve, we believe, their assets in the best way financially over the long term. The second big aspect of our work is getting more WRI research and data into the hands of investors. So making sure that it's in the right format for investors and that it's on the right platform for investors. So very much following the great examples of Aqueduct and the GHG protocol, which are already widely used. We want to do that for other risk and opportunity areas such as forestry, commodities, food, energy, climate. And then the third area that we believe we have a big role in unlocking potential in is really mainstreaming this all into the marketplace. So knowing that even with these asset owners are starting to ask for the right types of things and they have frameworks to move forward and get their capital flowing, what will they put this capital into? For most asset owners, they're not actually making the decisions day to day about which corporations to place their capital into. That's done through managers and through others in the financial system. So we want to have a very close relationship with these other players in the financial markets to make sure that they are designing products and that they are evaluating managers and that they are rating the marketplace according to what is grounded in WRI research as the most important sustainability, risk, and opportunity factors going forward. So one example here is that we've been working with our Global Forest Watch team here at WRI to design a tool that can be useful to the financial world. So you may be familiar already with Global Forest Watch, tremendous database and resource, but up until now there hasn't really been a platform for the investor community, the financial community. So we've been working with that team to help investors be able to create deforestation-free portfolios. So this is a prototype that's been developed using the sample, and you see a nice screenshot here of that. The inputs to this are can be things like the investment location of your assets, and then you can have some different scenarios that you can run. Right now, the target is ESG risk officers, retail bankers, but potentially, and we're working with them now, and this is moving more towards asset managers, the investment managers that we spoke with. And we have several other sort of strands of work here at WRI where we're working on some big data ideas and making sure that whatever WRI does as a whole can be useful and from a beginning stage designed so that investors will be able to take that data into account. And again, through these intermediaries, Bloomberg, MSCI, we want to make sure that, of course, whatever we do is globally accessible to investment managers. Okay, I think that wraps up the findings from the study and what we are planning on here at WRI, and some ideas of how we want to continue working with CCG members and with the business center overall at WRI. We'd love to open this up for questions if there are any. I'll just open it up there, yeah.
If I can just jump in, Elizabeth, and say, this is Daniel, a note of gratitude to you and your team. I mean, it's great at a high level when the board of WRI sees that the organization is voted year after year the #1 environmental think tank in the world, but it's the work of people like you on the team day to day that enable the organization to make a difference in the world. And having seen a lot of initiatives at WRI over the years, you and your team are as smart and capable and dedicated as any I've ever seen in this area around sustainable investing, and you're to be commended for the work to date. And I think in many ways we think it's really just the beginning. So just kudos to you and your team. And I
Thank
would
you,
also
Daniel.
just, you're welcome. And I would just echo also Elizabeth's sentiments that CCG was really founded, our vision, I think, at WRI, from those who told me about it when it was created, was to bring together a collection of forward-thinking companies who shared a common interest in sustainability issues in the corporate community. And we're only as good as an organization as we are at meeting real concrete needs and addressing real concrete challenges of our members. And so in the remaining 15 minutes or so, I know that what's important to us as an organization is to really get your feedback and to try and identify areas where we can link the sustainable investment work that Elizabeth and her team is doing with your businesses and with the CCG member work more generally.
Thank you, Daniel. Yes, I second both of those things. And I should just say also that the two other paper authors are here in the room as well, Ariel Pinchot and Julia Christensen. So this was a huge amount of work, and they get just as much credit for this research as I do. I think it would be wonderful to hear from the CCG members feedback, questions, ideas that you all have.
Absolutely. So we can start by just opening it to identify if anyone has some general reactions or questions or additions that you'd like to add to the presentation you just heard. So again, you can raise your hand and we can unmute you. You can jump right into the dialogue with your own voice, or if you'd like to chat your questions using the chat feature here of the webinar, we can read those out for you. I wonder if the BNY Mellon team, I know you're on the line, and we've had some conversations around sustainable development goals and some of your work on those specific focus areas within that. If there's anything that you'd like to add to the discussion from that perspective. Go ahead and unmute Anna and Heidi. If either of you wanted to add anything there.
Emily, hi, it's Anna.
Thanks, Anna.
I don't know if Heidi's on or not, but just wanted to add, I guess, that a lot of this feels very consistent with the conversations we've been having over the last few years at BNY Mellon. So just want to congratulate you on the work, and I think the emphasis that you've put on the bottlenecks and finding ways to partner to unbottleneck them are very welcome and consistent with what we've seen. Particular emphasis on the practical tools. We've heard from a number of different parties the need to simplify, make it look like a typical investment practice, and the kinds of models and concrete techniques that you're working towards. The forest tool, for instance, is very interesting. So would love to just continue to encourage that, and hopefully there's more that we can do together in that regard.
Thank you, Anna. I know that we also, I believe we have a few callers on the line as well, perhaps from Standish, if there's a perspective that you'd like to add to layer onto this discussion. Let me see about unmuting you as I go. I believe that might be, is it Stephen on the line? Stefan, I'm sorry, excuse me. We may have lost them here. Of course, it's open to anyone, so if there's any questions, I know that we have our members, for example, from PwC on the line, Caterpillar, if you're still on the line. If this is something that starts to connect from the company perspective as well, we'd love to hear that angle.
I mean, and so I guess just to throw some ideas out there, One thing that I think we'd be curious to hear from is, do you ever hear from investors about sustainability topics, or from others in your company, thinking that this might be an opportunity to present yourself to the investment world in a different light because of sustainability factors, or is this not really something that's changing, that's causing a change in your behavior at this point?
I suppose we have a quiet group today. I would credit maybe your very thorough presentation, Elizabeth, so thank you for doing that so well. We are happy to take additional questions if there are any. We can stay on the line for a moment here. I know there are a couple of other targeted questions that we'd be happy to talk through at the moment. We can read those out, or also to send us a follow-up. Do you want to maybe pick one more, Elizabeth, and see if it's something that we have any bites on?
Yeah, so I guess one more general question is just what is driving you as the leading businesses in this, incorporating sustainability into your business? What is driving you to do it? Does any of it have to do with your access to capital and the ultimate owners of your company or your managers, or is it really something else about a business opportunity that you see that doesn't really have to do with capital in the investment base? There's no right answer.
And of course, if this is something, just depending on, with our CCG, we do hit a pretty wide range of hats that you all wear. So these are questions that maybe don't fall directly under your scope of work. We're really always happy to connect as a follow-up with folks on your team now that you have the awareness of the detail and the work that our finance team is doing. We're happy to help you infiltrate this information further into your organizations. And
yeah. And I guess just one thing to throw out there too is something to think about is that we have thought about organizing an event where we would have CCG members meet some pension funds, endowments, or the ultimate capital owners that and have maybe we see it as an opportunity both for CCG members but also these asset owners to be able to learn from you all about how sustainability is impacting your business and driving the way that you meet your business. So think about that as something that we've thought about doing perhaps in conjunction with Mindshare or some other event, but just to sort of the point in the presentation that what we've seen from the research is that often the incentives and sort of the long-term planning, especially as it relates to sustainability between those two actors in the marketplace is quite similar. So having you in the same room together to hear from each other about sustainability driving your businesses and your planning could be quite interesting. So we just love your thoughts on that if you were interested in doing that or not, or as we think about growing this program going forward.
Absolutely. So if that's something that anyone on the line specifically is interested in hearing more about, you can feel free to identify yourself and we'll follow up with you. But again, that's something that we can include in the follow-up about this webinar so that you know how to make that connection with the appropriate people in your team if applicable. Well, if there are no further questions, then I want to really thank all of our CCG members for taking the time today to dial into our webinar. And of course, thanks so much to our presenters for sharing their fantastic research with the audience today. And as always, if you have any questions, you can always send those through to me. I'm happy to play air traffic control and help always connect our CCG members with WRI's experts for a follow-up and in-depth conversation. So with that, Elizabeth or Daniel, if you don't have any parting notes, I think we can wrap up.
Thank you all for joining us.
Thanks so much.
Thanks, everyone.
Okay.
Take care.
Have a good afternoon.
Bye-bye. Thanks. Bye.